Soldiers, the smoke is finally clearing. Look at this Bitcoin 1-hour chart immediately. For days, this white falling trend line has been choking the price. I marked it with blue arrows. Every time we tried to rally, we got hammered down. But look at the right side. The chains are broken. We have officially smashed through this resistance and reclaimed the $70,000 level. This is the first real breath of air the market has taken since the crash. Is this the reversal or is it a trap? We are about to find out. But first, the standard war room protocol. This is not financial advice. We are trading probabilities, not certainties. Manage your risk. In this video, we will analyze exactly what this breakout means for the big three: Bitcoin, Ethereum, and XRP. Let's dive in. First, look at the 3-day chart. This is the big picture. Do you see that long wick down into our yellow demand zone? That was the weekly EMA 200 test we talked about. The bears tried to break it, but the bulls stepped in with massive volume. We have bounced perfectly from $66,000 back up to $70,000. This confirms that the macro uptrend is still intact. Our next major resistance is that blue box above us, around $72,000. If we close the 3-day candle like this, it is a very bullish signal. Now, let's zoom in to the 1-hour chart to see the trigger. This white descending trend line has been our nightmare for days. Look at the blue arrows. Every time we touched it, we got rejected. But the chains are broken. We finally smashed through this resistance and retested it as support. We are currently trading around $69,700. As long as Bitcoin stays above this white line, the short-term trend is UP. The path of least resistance has flipped. Why is this bounce healthy? The answer is in the Coinalyze data. Look at the middle chart, open interest. See that massive drop? That is the sound of billions of dollars in leverage getting wiped out. The market is now light. The heavy longs are gone. Although the long/short ratio, bottom green line, is still around 67%, it matters less now because the total open interest is so low. This gives the market maker room to push the price up without rewarding too many people. Finally, where are we going? The liquidation heat map shows the new magnet. Since we flushed the longs below, the liquidity has moved up. Look at those bright yellow lines forming above $70,000 and $71,000. These are the short sellers who entered late. The market maker loves to squeeze late shorts. I expect price to gravitate towards $71,500 to hunt this new liquidity. Bitcoin has secured the perimeter, the breakout is real, and the leverage is flushed. But if the king is safe, what about the prince? Is Ethereum ready to follow, or is it still stuck in the trap? Let's check ETH. Now we deploy to the Ethereum front. Soldiers, this was a close call. Look at the 1-hour chart. We tested the absolute bottom of our yellow support zone at $2,017. If we had lost this level, it would have been game over. But look at the reaction. The bulls stepped in exactly where they needed to. We have now broken above this white descending trend line that was crushing the price for days. We are trading around $2,040. The immediate danger is over, but we still have a lot of work to do to clear the resistance above. Why did the price stop falling? The data tells the story. Look at the Coinalyze chart, specifically the middle panel. See that cliff drop in open interest? That is the sound of capitulation. The leverage was completely wiped out. However, a word of caution. Look at the long/short ratio at the bottom. It is still sitting at 72.4% long. The crowd is still very crowded on the long side. But since the total open interest is low, this high ratio is less dangerous than before. The heavy leverage is gone. So, where does the prince go from here? The liquidation heat map reveals the path. Just like Bitcoin, the liquidity has flipped to the upside. We see bright yellow clusters building up around $2,100 and higher. The market maker has cleared the downside. Now they are looking to squeeze the late bears. I expect a grind up towards $2,100 to test that liquidity. The verdict for Ethereum: the bleeding has stopped, the leverage is flushed, and the path points up. Now, let's move to the final warrior who loves to surprise us when the market turns green. XRP. Finally, we arrive at the XRP front. Soldiers, this chart is beautiful. Look at the 3-day chart. We talked about this blue support zone between $1.10 and $1.20 for weeks. The bears tried to push us down, but look at the reaction. We bounced perfectly off this zone and the price has exploded back up to $1.49. The structure is saved. However, the mission is not over. We are now approaching this massive black descending trend line. This is the final boss. If we break this line, XRP goes vertical. Why do we have fuel for this move? The data explains it. Look at the Coinalyze chart. Just like Bitcoin and Ethereum, the open interest middle chart has collapsed. The over-leveraged gamblers were washed out during the crash. The market is light. But be careful, the long/short ratio is still sitting at 70.7% long. The crowd is very bullish again. Usually this is a warning sign, but since the leverage is low, the price can still climb to punish the late short sellers. Where is the price heading next? The liquidation heatmap gives us the coordinates. The liquidity below $1.20 has been swept. It's gone. Now the magnet is above. Look at those bright yellow clusters forming between $1.55 and $1.60. That is where the bears have placed their stop losses. I expect XRP to continue this momentum and hunt that liquidity at $1.60 in the short term. Soldiers, let's summarize the victory on today's battlefield. Bitcoin has broken the 1-hour descending trendline and reclaimed $70,000. The weekly EMA 200 defense was successful. Ethereum survived the test at $2,017 and is grinding back up. XRP defended the blue box and is targeting $1.60 liquidity. The verdict, the billion-dollar flush, is over. The leverage is wiped. The path of least resistance has flipped to the upside. But do not get complacent. We need to see a strong weekly close to confirm the bull run is back on track. Remember, this is not financial advice. We survived the crash because we respected the data, not the hype. Keep your risk tight. We analyze the charts while others panic. Smash that subscribe button and join the war room to stay ahead of the next move. The trend is your friend until it bends. War room dismissed.